with a gob of money being thrown at initial coin offerings ICOs of late and breaking records amid the price of Bitcoin hitting new highs, the U.S. Securities and Commission (SEC) has issued a statement in relation to celebrities and others using social media networks to encourage the public to purchase stocks and other investments. These endorsements may be unlawful if they do not disclose the nature, source, and amount of any compensation paid, directly or indirectly, by the company in exchange for the endorsement, a statement from the SEC issued this Wednesday read. And, indeed, there is a lot of money sloshing around in the space, with ICOs having raised around $2 billion so this year, with a plethora of ventures from across the industry spectrum tapping the market. The SEC's Enforcement Division and Office of Compliance Inspections and Examinations is encouraging investors to be wary of investment opportunities that sound too good to be true. We encourage investors to research potential investments rather than rely on paid endorsements from artists, sports figures, or other icons, it added. The SEC noted that celebrities and others have recently promoted investments in ICO''s. Citing their report of investigation July 25, 2017 concerning the DAO, a decentralized autonomous organization created by Slock.it and Slock.it's co-founders, the U.S. financial regulator warned that virtual tokens or coins sold in ICOs may be securities, and those who offer and sell securities in the United States must comply with the federal securities laws. As such, the Commission stressed that any celebrity or other individual who promotes a virtual token or coin that is a security must disclose the nature, scope, and amount of compensation received in exchange for the promotion. Failure to disclose such information constitutes a violation of the anti-touting provisions of the federal securities laws. And, it said that people making these endorsements may also be liable for potential violations of the anti-fraud provisions of the federal securities laws, for participating in an unregistered offer and sale of securities, and for acting as unregistered brokers. As Charles Hoskinson, formerly an Ethereum co-founder who in 2015 founded ICO, a leading blockchain R&D company, said to me in relation to ICOs recently, once people realize they can make money through this mechanism, ICOs, many people are going to try. It's a value transfer mechanism. The American from Boulder, Colorado, whose ICO team over the past 2 years designed Cardano, an industrial-strength blockchain, added it does not, however, replace basic business principles such as due diligence, use of funds, who comprises the management, what is the business plan, and how the entity in question is going to execute on its plan. He added, an ICO, a token, has to have a right to exist, it has to perform something and have some form of a utility. It cannot be used to capitalize an endeavor. But people often forget about such things. One could even talk about the merits of sci-fi ICOs and real ICOs, as well as the question about how many of these ICOs will actually succeed at the end of the day. In respect of the SEC's 18-page statement on DAO from July, Hoskinson noted the SEC was very careful in the reading of the landscape, and every word it used was carefully chosen. What they said in relation to the DAO, if it was a normal vehicle like a venture capital fund or an equity offering, all the facts and circumstances would say you would have absolutely register with the SEC. But ICO entities or offerings effectively saying that because they are decentralized and they are somehow immune from regulation won't wash. The SEC's opinion was that such an approach cannot be taken. As Hoskinson pointed out using an analogy, if you call a duck a rooster, it doesn't change the fact that it's a duck. However, at the time of the SEC's statement, they did not take a position on the meat of what is going on in the cryptocurrency space, according to Hoskinson. For example, they do not comment on utility tokens. So it leaves the door open to more positions and statements coming in due course. Investor protection. The SEC said it will continue to focus on these types of promotions in order to protect investors and to ensure compliance with the securities laws. Its mission is, after all, to maintain fair, orderly and efficient markets, as well as facilitate capital formation and promote a market environment worthy of the public's trust. It minded investors to note that celebrity endorsements may appear unbiased, but instead may be part of a paid promotion. Therefore, investment decisions should not be based solely on an endorsement by a promoter or other individual. Celebrities who endorse an investment often do not have sufficient expertise to ensure that the investment is appropriate and in compliance with federal securities laws, the latest statement had.